Welcome to Beginning Options Technical Analysis and Educational presentation that accompanies a newsletter that I provide on LinkedIn. The name is Ed. Today is March 10th, 2024. Um, Obviously, I've been trading markets for some time and analyzing them, and I am sharing the knowledge that I've gained in the hopes of helping others and establishing a community. The newsletter will bring together analysis from various perspectives for busy pros like yourself who may not have time to accomplish the compilation of various channels worth of stock, whether you're taking newsletters, information from the Wall Street Journal, or YouTube videos. Because I've been following certain channels and learning and paid for training, I understand that people really are interested in the mechanics and making money on the fly as a beginner without spending years and years of analysis. I do have a master's degree in public finance from GW and in IT from Quinnipiac. So that's enough about me. Um, we are looking at stocks that trade above the 20 million volume of contracts per week, or per day rather. And last week we looked at a few stocks, and I want to continue down the path of getting you familiar with analyzing stocks on the weekend so that you can learn in short order in a few weeks how to place your own trades and when to do it. We are looking at candlestick patterns, what they mean, and whether we can identify trends and how to spot them. Let us have a look at the slide we saw last time. A month ago, we were looking at Apple. It trades above 20 million. It ranged between $191 and 100 and about $182. 191 and 182. We said that's a big spread. There's money to be made on the way down. What if that stock continued to go up? In other words, we see it's at 191 on the 7th. On the 14th, 15th, 16th, it had gone down by $9. Again, that's a healthy consolidation. I will say that we talked about candlesticks. A red candlestick opens at the high of that candle and closes at the low. The white candlestick opens at the bottom. The price opens at the bottom and closes at the top. So if you look at the chart on the 5th, the stock opened right at the top of that red candle and closed at the bottom at the end of those 30 minutes. It took another 2 hours to capture that loss, and it went a little bit higher. So you can't study a chart just by looking at an independent candle, right? But you have to look at maybe the trends. And the lines were drawn to show where there was something preventing the stock from going up above it, and or providing what amounts to a floor for a stock. It seemed to bounce off that level. We'll talk about bounces a little bit more. This is more of an indication of what you do with the chart when you have it. You want to draw lines where there appears to be a lot of activity because those are generally the places that people are trading, and that's where you're going to be trading as well. Now we're looking at the activity of Apple of the last 30 days. We pick it up where the last video left off on or about the 16th of February. We were trying to deduce whether this stock was a buy or not. We said, look, the stock tends to move in about $10 increments during a 2-week period. So maybe buying or thinking about buying it again because it may resume its trek to the top side of that period would resolve to some significant gains. Nevertheless, the inverse was true. The stock, after going to 182, we said from 191, looks like it went down to 172 or so. Let's see that one. It's telling us stock was trading about 172. Yep, toward the end of the period. Again, you can make money by placing options going in the bearish direction. And so you would have made money, as in fact I had done on March 4th. I noticed these three red candles there. And I said, look, there doesn't seem to be a lot of support there for that stock. And sure enough, it went down. So I made a little bit of money, took profit on Monday and Tuesday of this week. Happy to say, 18 times profit, believe it or not. On the second lot, the first lot was a 6-time profit. So you can do the math. 100 turned 600 and 100 turned 1800. Okay. Yeah. That's what I trade in increments of about 200. All right. Candlesticks, as we know, are looking red a lot of the time. There doesn't seem to be as much places of consolidation. I'm going to hold the cursor right here. There's not as much consolidation, as there was in the previous chart, so things were a little weak. Now, I'll notice at the end of this week, there was a lot of price activity right around that 170 mark. So it looks like price is trying to hold there. And it looks like investors are saying, let's go bullish on it because it looks like in general there are more white candles. It looks like there are higher lows. The red candle stopped there at 170.73 after bottoming previously closer to 169. The next stock I wanted to go over last time a month ago was Ford. Again, it met the $25 million criteria. The red lines are just areas that I was hashing out as potential areas of a lot of activity. The only one, obviously, that looks good to me was the one, two, three, the fourth one. Let's see if I can highlight that for you. I think the only important one here. So that's two, that's three. This is the important one. As you see, if I extend that, there was a lot of activity. This direction, if it's going above it a lot, as it did during maybe 50% of that time, that's called a price support or a floor. So it went down and went up, Ford did, during that 2-week period. It used that price level as support, and then it looked like it was acting as a little bit of resistance, so it wouldn't break above it again. But it still means that there's a lot of activity, and that's where buyers and sellers are coming in. So if you're looking for prices, that's where buyers and sellers are coming in. If based on my experience in the markets, if I'm not mistaken, when there's this much activity, the stock doesn't know. It's indecisive. It doesn't know whether it wants to go up or down. But if it goes up from this price, it's more than likely going to test where it was last at the high and where it was at the low. Because we seem to be moving in an upward direction, what amounts to the momentum appears to be in the positive direction. I would wager that Ford did okay in the past couple weeks. Let's take a look. All right, let's unveil the chart. Let's put the cursor right there where we were at the end of last show. Okay, we were right around here. February the 16th, we said, look, There seems to be a lot of activity at this price range. It looks like in the past couple of weeks, the stock was primarily to the left and below that. Momentum seems to be indicating it wants to go back up. Instead, the stock went down as low as 1180 on the charts there on the 27th, which is roughly, let's see, after 16th to the 27th. That was the weekend. So right around the 23rd, it went down there. It stayed there. It did a little loop, but guess what? It did shoot back up to the high of the previous period. That high of the previous period was met. So the stock did want to go back there. It absolutely did want to go back there. So if you had bought a call and an option that expired more or less last Friday, you would have had the opportunity to make some money on that. So we're learning about ranges. Where do they meet? And they tend to go to the highest of that period, or the lowest, or above it or beneath it. And that's the purpose of these analysis, to understand the movement. And it looks like you do have to give the stock some time. So if you make that prediction on the 16th that this is momentum in positive direction, and you buy an option, which are weekly, for the 23rd, you would have been out. If you had done the 30th, okay, 2 weeks down the road, uh, maybe not as good. The third week option looks like what people recommend to do would have done okay. Um, and it wouldn't have hurt to maybe make a short order, a position in a negative direction once you saw it break down a little bit, because it broke down a little bit further. Didn't move a lot, okay, but it did go from the low of the last 2 weeks to the high of the last 2 weeks, and that's wonderful news because we're analyzing ranges, and now we know want to get at the bottom. It tried once, it tried twice, it closed right here on the February 28th, back at that original point of resistance. So we know resistance effectively held, was broken, now acting as support. Bought an option there. Lovely, lovely times. Having a look now at the third stock here, we've gone over Apple, we looked at Ford. Now let's look at Bank of America, greater detail. And Bank of America, it effectively really didn't do much in the first week. We drew lines of support there. If we had bought, a put there, we would have won. If we bought a call there, we would have won. Except at the end of the day, the long call was correct. Okay, the stock. Let's look at it on this, on that 7 day period. We stopped looking at stocks on the Friday, the 16th. It ended higher than it had opened. The momentum, meaning where is it closing in relation to the high and low of the period? The low is way down here, the high is here, the momentum is positive. It's hanging around at this price range. Let's draw the line for you. It's hanging around at a price range right here. When it's hanging around, that's where buyers and sellers are meeting. That's where it's going to move. That's where people are waiting for the move. So if you look at this chart and you say the momentum is positive, you have gone in the positive direction on your option call. Let's see what it did in the next slide. All right, let's go back to the 16th. We saw that there was a lot of activity. We said that's where the buyers and sellers are meeting. That's where I make my position. I'm going to say it's going to go up because it's closing closer to the high of that period. Look up 3 weeks to last Friday, and it did go up. It went from where it was trading at 30. Looks like let's double check what the number says. 36, 30, yeah, 33.70 all the way up to about $36. Um, 33.70 to $36. That's $2. It's about 5%. So what we're seeing is stocks are making these big moves in 3-week periods to these um, positions in lining with these ideas of buy and sell. So we would have been in luck with that. I didn't trade Bank of America this past period, but I know that using my signaling methodology as described in this slides, we would have been pretty correct. We'd identified that Ford was doing the same thing, moving to the high of the previous period, and we were identifying ranges of price action where it seemed like every 5% or so the stock was hovering. In this case, looking at Bank of America, um, we'd have to say that it's moving closer to $1, $2 increments, still maybe 3-4%, but we're learning. Okay, we were right on this one. Let's pat ourselves on the back. Next, we are looking at the exchange traded fund for the Russell 200 or 2000. Sorry, those are small caps, small businesses. If you hadn't read the news lately, the Russell 2000 hadn't done well during the bullish run of the last year, but it's starting to pick up steam now. So our charts were showing at the beginning of the period it was making some progress from these areas of high activity. Let's delineate the area of high activity again. Let's pick a color here, reddish. This is the area of high activity. It went up. These little lines show areas of small activity. Look, if there's small activity, it looks like it's continuing. There was an area in the market there where it gapped down. I think that was related to the news about the situation involving interest rates and inflation. News comes out once a month about that. It was not deterred. It did go down. And if you notice, the same area of support bounced back at the end of the period like a coat hanger to that period where we were on the 16th. Again, this is a momentum play, right? It looks like the stock is closing toward the high of that period. That's called momentum. So let's see. We're going to just bet on option 3 weeks out that that stock continued. Looking at Pfizer, a few red candles, but these red candles are coming off highs, right? So they're coming off highs into places of high activity. The first one we're looking at is after a big move up. We'll highlight this one. After big move up, ending here. After big move up, ending here, you saw a red candle. Then after big move up here, you saw a red candle. Okay, this area here, we'll just call it generally speaking, this area here, was an area of, how shall I say, support, right? It was an area where after it went to a high, it came down here and it wouldn't try to come down to the previous low. It just the previous low over here. It stayed put or went even a little bit higher. You notice this, like they call them higher lows, a little bit of increment. Now we had the crazy news. After the crazy news, okay, so a weird week to trade, stock continued to go a little bit higher. So what are we saying? It's closing close to the high. Why not be bullish on this? There's no reason. The trend is your friend is what you hear. There's no reason to trade against the trend. That's what you'll hear over and over. Let's look at it since then. All right, so we were bullish on this stock, Pfizer, February 16th. It closed at about, let's see, 16th. It closed at approximately $27.60. It did continue to go up to about 28. However, it hasn't. It closed At the end of the day, Friday, pretty much where it opened 2 weeks ago. So even though we were bullish on it, what are we seeing? All right, the trend is your friend. We're not really losing a lot of money here because, uh, technically, if we had gotten in on the 16th, you know, I have to say we would have lost money on this. Sorry, we would have lost money on this because it didn't finish higher than where we wanted it to finish. So if we look at the 16th, it was trading in the 2760s. Typically, people buy options at a higher price. We really wouldn't have made that higher price. Like we would have been lucky if we'd gotten to 28. So we would have lost money. Now, what does that mean? All right, there's a change in direction. So there's a change in direction, um, and we just have to live with that. The stock there is no longer as hot. So take a mental note. This one is now in a bearish direction. Lost money. Let's take a look at the ETF for the S&P 500. At the end of the day, at the end of that 2 week period we looked at last time, the stock looked to be moving in the positive direction from the lows on the lower left of the slides. There are a lot of red candles, again, like in the previous situation, that we are seeing after it gets to a high period for a period. So it started here, went up, consolidated, then it went up. Consolidated, went up, consolidated here. There's a blip in the action because of the news. So effectively, the full range of activity was captured in that period. Stock is here at the end of that period. Do we think it'll go up to this point? Yes, because the momentum seems to say you're closing close to the high. So we're looking at the SPY on the 16th. We said it's closing close to the highs. That's a momentum indicator looking to the right. All right, we're seeing some areas of support at 594, it says. Sorry, 514. Support 514 on the 27th. It had support there on the 22nd, 27th, 28th, 29th, higher highs. We were bullish. We were correct. It closed above the above the opening price on the 16th. The opening price on the 16th, so 492. It's telling us. Nope, right here. 4.99, closing closer to 5.15. That's $15 divided by 5 because we're in the 500 range. That's a 3% move. Some people made money. 3% is a good bit of money. All right, so we were correct on the SPY. Tech ETF is next. Looks like until the news, the stock was headed with its higher lows, higher highs, uh, and then closed toward right there in the middle between the highs and the lows of the period. So you might say that the Qs were slowing down. Let's see how it did by looking at the next slide. So the Qs show a lot of red activity, meaning it's not holding these highs. It did proceed forward a little bit bullishly. We had said we were neutral on it, so you would have made a little bit of money on it, but it closed 440, which is $5 up above where you were before. So this is showing us, look, it's going up between 430 and 435, or between 435 and 435 and 445, up and down a lot since the start of the month. I don't like that. That's choppy. It looks like it's indecisive. There's no clear levels of support, is there? So yeah, right now people might say you're bullish on the Qs still, but I think that's a stretch. Let's have a look at American Airlines. American Airlines is not showing a lot of patterns that are very clear. We don't see a lot of consistent places of activity. You might say that that's one, that this might be a bullish trend, but there's not a lot of defined activity like the other ones you were seeing activity here, like consistently 3 or 4 days in a row. So my concern here is that this stock is too hard to read. I'd stay out of it. Let's see what it did in the next 2 week segment since we reported on it a month ago. And as we look at American Airlines, we'll see that after 16th, there's where I'm talking about a lot of activity. That's considered a floor or ceiling. It did start to go forward in a bullish direction. It did end up collapsing. So we said we didn't like it so much because it seemed to just not have a lot of stability. However, it does seem to have found support here. It tried to break support. We see on the left 16, 17, 18, 16 to 22nd, it had price support there at the 1467 range. So it crashed down a little below it and then continued to see activity. Is it going to go up or down? I mean, at this point, it's looking like it wants to stay in this range for a while. Maybe making lower lows. We'll be bullish on this one. I'm sorry, bearish on this one. In looking at Roku, what is really standing out is the really, really small candle sizes. And the small candle sizes indicate there's not a lot of money, right? Not a lot of price activity. It wanted to go up and then it resumed at the price where it was at the beginning of the period. And it actually gapped down toward the end of the period. When you see a gap down, two things happen. The gap, was because of some overnight activity in news, and stocks want to retest the highs of the period. So we know it's going to try to retest that high. We just don't know how soon that's going to happen. But we know that greedy investors are looking at that price range of $90 and saying that's where I'm going to put in a long call. Let's see if a long call would have worked. The gap that we witnessed on the 16th was followed by yet another gap in down direction. That activity in the down direction was not met by a bullish reaction during the past couple of weeks. We have yet to see that price of the previous period be met. So are we now in a bearish? Obviously, we're waiting to see usually you want to take 5 to 6 weeks before you determine bear or bull market, I guess, on these types of stocks. But right now it's leaning toward bearish, and no hope for this one. Roku's out of the picture. Next stock we're looking at shows those red candles after the highs of the previous day. It's showing some price support at the following. Looking at 162, it looks like the 162 range, which I'm going to draw right here, is an area with some attention. There, a separate period, a separate period, and now it appears that we are inching upward. The momentum was upward. We're going to be bullish on this. And if we're wrong, if we're bearish, we expect the stock to come down to here. On the 16th, we said, look, if it loses momentum, it's got a long way to fall back down to this, 110 area. And we were slightly bullish on it. We don't see a lot of consistency, a few gaps. It's kind of inching its way upward. It's at the high of the period. I don't like the fact that it doesn't have a lot of periods where it's got this sort of chop in it at the 134 range from the 26th of February till the 1st of March. That's a solid area. We don't see a lot of solid areas like that since, the beginning of March. It's kind of inched its way up with a few higher highs. So right now that's a train that I missed. I'm not interested in it. It doesn't seem to be making a consistent a consistent gradient upwards. So I'm thinking, look, that stock's got a lot of room to fall. If it falls, if it stays and continues to grow, so be it. I don't think that's an investor's paradise right there. We were saying good things about the entertainment and the utilities or the cable companies. We don't think they're going away. Think they're a very good investment. This might be a buying opportunity. There's not enough data on this chart really after the bearish sessions from the 6th until the 10th to work with. So we're looking at the right side of the chart. We're looking at some considerable base at the $42 mark, meaning it's been there from the 13th to the 16th, and it really hasn't gone anywhere. It tried to go up a little bit. It didn't make it. If it breaks that low of $41, we know that stock is headed toward, the next level down. It's going to try to recover the high of the period, which I think is $43. Am I bearish on it? Well, the momentum says no. The stock is closing closer to the low of the period. If I wanted to put in a swing for $43 a month down the road, we might hit it. It's a good place to consider hitting it in the long range. But the markets are telling us that this is bullish. I'm sorry, bearish. We think that on the 16th, the stock has room to grow. There are a lot of red candles. There's not a lot of real stability, support, resistance. Looks like it's on lower lows, but it did increase, didn't it? It went up from February 16th at the close of the business. It went up from 41, 44, looks like 41, 44, and closed 40, looks like it's at 42. It made it as high as 43. So I may have been right on this one. This is clearly an area where people are trying to buy, and they're not really worried about it too much. It's not a lot of price activity. It does appear to be making higher highs. It does appear to be in a range. Looks like the range is there 43 to 42, but that range is unstable. Not a lot of floor support lately. So right now, this stock is probably avoidable. If you're buying it, it's not options, it's buying it to own. So having a look at the next stock is Lyft. We'll take advantage of the thinkorswim platform to look at in in a different, more readable view than Charles Schwab. thinkorswim. So we did notice a gap up toward the end of the period there. February 14th, we said gap up. Seems to be holding support there at 16 bucks. So Lyft is in a looks like a bullish territory, but let's look more carefully at it. This is the 6 month view, I think, or the year view, which shows you that Lyft had a lot of price support there at the $10 area. Like it's not going anywhere. That's the $10. It is now creating support at the 12 where it used to be resistance. So it went up and above that higher high of the past year. And so it's proving itself to be a stable, trustworthy stock. It's got support at $12. It more importantly, it went up and found support at 16, looks like. So it looks like it's ranging. It's ranging from it's ranging from the $9 area to the $12 area, and then it's ranging $12 area right there to the $15 area. Now it's trying to test the $18 area. Is it going to hold there? Looks like it's done its job. So let's look at it on a smaller time frame, shall we? The time frame I want to look at on thinkorswim is chart settings. Click on time axis. We don't want to look at it in a year. We've been looking at it actually in the 30-day range, and we've been looking at 30 minutes. So let's look at that. Okay. All right. So we saw the gap up at the end of the last period, 16th or so. Now that was here. 16th was here. Today we're more like over here. Yep, it's holding that $18 area. It's moving in these $2 increments, or trying to. I would say it's arguably not showing a consistent growth. It's showing a shrinking growth, which is to say, right now, Lyft has something to prove. It doesn't seem like it's gonna be able to. It seems like it's holding 18, but I wouldn't trust it to go to 21, and I wouldn't be surprised if it came back down to 15. So I'm staying out of this one. This is February 16th, and Riot was attempting to hold $16 range. The $16 range had been held on the 16th for about a week. It was acting as resistance, then support, then it broke down beneath it, it rose above it, held support, then broke down beneath it to a previous area that looked like right around 1450 that served as resistance and support. It's now in a no man's land at $12 between. Well, $12 looks like it used to be a resistance point. It went above. Um, I can't be thrilled or unthrilled about Riot. Looks like this is a good place for Riot. If it goes back up, it's going to test those $18. We know that. We know that's a lot of movement. We know we got to be hungry and looking out for that. So Riot is one to watch. That's on my watch list. We had paid attention to the following stock Dropbox, February 16th. And the reason we did that is we we were under the impression that stocks that make moves like that, if it's a healthy move, it's usually followed by a retracement. And they call it a Fibonacci retracement. In this case, it's made no retracement whatsoever. It's hovered at the 23-24 period dollars. So I'm going to look out. Let's look at the time frame. Oh, I got the 180 time frame, 180 days, and let's look at it on the daily basis. Time frame, 24 hours, because we want to identify, is this the low of the past year, and it is. Let's see how far I have to go back in time to find support because it's in no man's land, isn't it? Let's look at the let's look at the 1 year view. Okay, all right. The 1 year view just does in fact suggest that it has a couple bucks to fall. It can fall down to the 22 range where it's been at, but now it's ranging at 24. So it's looking like the stock isn't willing to go anywhere. All right, let's forget about this one. In conclusion, guys, we are looking at my watch lists and we are going to look at the stocks that were in the 20 million volume range that we were talking about. And the way I did that is I pulled it up, I click on volume, and okay, so Nvidia was near the top. Apple was at 76 million. So Apple was way above the 20 million, whereas that is extremely high for Apple. It's been trading at 20 million. Again, 76 million means like a lot of people are trading it. That's a good thing. I haven't seen Ford at 54 million that high before. The financials are high. Um, so we're not really adding anything to the list from this particular one. Um, JD.com, maybe Tilray, which is a marijuana stock, semiconductors, uh, and not even Microsoft made it to 20 million, but it's close. Microsoft you might include next time. So we're not really adding or subtracting much right at the moment as far as I can see, but the purpose of this closing slide is to show the methodology. So we're looking at stocks here over 20 million. I don't trade gold or the ETF. These are gold stocks. These are shorting the S&P 500. That was a lot of shorting going on Friday. Um, Ultra short, shorting the Qs, quarter of a billion contracts. Can you believe that? Quarter of a billion contracts shorting that. All right, so there's a lot of sentiment in the down direction. Again, let's look at another segment of my watch list over 20 million. Tesla's in there, Apple's in there, QQQ, Bank of America. We've covered the Russell. We don't cover gold and silver. Google was in there. I'll add that next time. So really, Google was on the downtrend, so I don't particularly like it. And we're looking at another couple watch lists just to make sure we're not missing anything obvious in the 20 million range here. So we're looking at HP, Hewlett Packard has come in there, Micron has come in there. Okay, we'll look at those next time. Not a surprise. Um, Hewlett Packard and Micron we can look at next week. And let's see. Nope, don't trade gold. Indexes weren't super high volume if I remember last time. Let's see what we got this time. This time we got PayPal's trying to sneak up there. Semiconductors have their ETF. Google, we said, don't trade silver. We don't touch shorts. Amazon, we know, is up there. Adding that. Pfizer, we talked about. Intel's been traded some. Okay, not much to add. Just want to double check nothing snuck up on us. I guess PayPal snuck up on us. I don't really like that one. Gold still on that one. I do like the EV plays. There's not a lot of activity in the EV market usually. Penny stocks that I get from watch lists, not super huge. Stocks that were active this time last year. See, what are we looking at? Not much to add. Semis have an ETF. We said Intel we're going to look at next time. AMD's up there, of course. We'll have to look at AMD next time as well. Oil stocks. Who's making? It's usually just that big one, ExxonMobil. That's not even that. That didn't even make it this time around. Let's see. Anything else we're missing? Tesla. I don't really trade Tesla. Pfizer is very highly traded this time. Riot. We still got Riot in there. And let's see. Okay. No surprises, right? Let's see. JD.com is kind of a Chinese company. Um, Gap is in there this time. All right. Nothing super surprising in my watch lists. You can set up watch lists on any brokerage account, gold, AT&T. Okay, that's the end of this presentation. Thanks for joining us. I hope you enjoyed it, and we'll talk to you next week. I'm sorry, next newsletter.